Welcome back to another episode of Debits and Credits with Haas and Dawe. Today we're going to be talking about the trust accounting best practices. The trust account obviously is the most important part of the escrow company's book of business in that it's customers' money. It's the money that's come in for the purchases of real estate or for the refinancing of trustee loans. So it's important that the trust accounting practices within the company are kept at the highest level of care. Now, it's extremely important that this is done every day, and it perhaps is the most important part of the escrow company activity on a day-to-day basis, that they keep the trust accounting records clean and complete. There are minimum requirements under the escrow law. Under the California Code of Regulations, it's section 1732.2 that talks about escrow books. And within these regulations, it talks about sequentially numbered activities, receipts, incoming wire transfers, outgoing wire transfers, checks, transfers, and that the trust accounts are reconciled on a monthly basis, and that any exception items are resolved timely, and that daily manual control summaries are used to verify what the software units come up with on a daily basis. Now, what baffles people sometimes is this rule about manual control summaries. And it really is manual in that you as an escrow agent have to manually add up all your receipts and checks for the day, your incoming wires, your outgoing wire transfers. You start with your beginning balance in the trust trial balance, and you add the receipts and the incoming activity. You subtract off the checks and the outgoing activity to come up with an ending balance, and that needs to be compared to what your software comes up with to compare that it is the same number. And why the department wants this to still continue to happen in today's day of modern technology is in case the integration process within your software doesn't work, or it glitches, or it drops items. That way you'll know that something did not get into the record keeping within the computer. Now, when we talk about manual, in the old days, it would be that you'd have an adding machine and you would run a tape of all the receipts and all the checks and so on. In today's world, you can use technology. In other words, you can use like an Excel spreadsheet concept to enter all the transactions and add them up and then put them into your control summary computation. But what the department says you can't do, you can't just take the numbers that spit out of your software and copy them over into the manual control summary, because then you're defeating the purpose of doing it as a check on your records. And so that's why this daily manual control summary still needs to be done. Now, on a best practices standpoint, it's getting where the reconciliation process of the trust account should be done daily. And some banks and some of the software providers do offer this service. Well, they'll reconcile the trust account on a daily basis. The advantage of this is that it allows you to see all the check activity and the outgoing wire activity every day, not just at the end of the month, and also incoming wire activity. These are all areas that are subject to fraud invasion by the people outside trying to get into your system to create frauds and scams and so on. And what it also does is it lets you see if there are any exception items every day. And maybe it's just a matter of that an incoming wire that came in at the end of the day where the receipt didn't get issued, or a deposit in transit to the bank didn't get credited to the bank yet. It allows you to see were there other items, such as a check being issued for a different amount than actually paid at the bank, or for an outgoing wire transfer or an incoming wire transfer where the receipt or the outgoing wire transfer slip was recorded for a different amount than actually hit the bank. So what the daily reconciliations do, it allows you to catch that and fix it. Because sometimes here's like the worst case scenario, that let's say there was a transaction that happened on the second day of the month and it got done for the wrong amount. Or let's say something happened that caused an exception item. You wouldn't know until the end of the month, so probably 4 to 5 weeks later, that there was an exception item. By that time, it might have created a loss or a shortage in an escrow file that could have been prevented had the reconciliation process been done daily. So this is something to consider in looking at your activity and getting with your software providers or your bank about a daily reconciliation process. Now, another option is called positive pay. and an extreme on that is called Payee positive pay. This is where every day your bank gets a list of all the checks you wrote for the day. And then as checks come in for payment, the bank compares it to that list to see if there's any difference in the dollar amount or of the date. And now with Payee positive pay, well, there's been a difference in the payee of the check to make sure that people aren't trying to pass bad checks. Because what's happening is they're either duplicating your checks and creating check numbers that you haven't sent in. And so that would create a red flag at the bank. Or they're taking a check they've stolen it and they wash out the original payee and put in a new payee name. And this is something else that we get caught on a daily basis with your bank using the positive pay process. And it's something that we encourage that people do that. A funny story is going back, I'm going to date myself here, going back into the 1980s when the bank started introducing positive pay to customers. And I said to the bank representative, so this means that from your side as the bank, you're no longer going to hand pay checks as they come in, check by check. And she said, yes, that's true. And now you're putting it onto the customer to do that for you. And she said, yes, that's true. And I said, and the customer has the privilege of paying for this service. And she said, yes, that's true. But in the long run, as much as it seems frustrating that this is a function that the banks used to do, again, going back 4 decades, is something very important. We think that you all have positive pay and payee positive pay within your system because the cost of the service is well less than the cost of any potential loss. As they say, um, an ounce of prevention is worth more than the pound of cure. It's really a good thing to do. Now, some other common mistakes we're seeing with the daily trust accounting process is that people are not doing the manual control summary. Now, this is a requirement under the regulation that people do the manual control summary. And we've seen at the beginning when people first get their license and they start processing escrows that they have not set this up and no one has educated them about it. So it's something where we just suggest to people that they make sure that they're aware of this manual control summary process, and we can help with it. We have spreadsheets that we've helped people set up. Whether if they don't because if they don't get something from their software provider, it's something that can be done in like an Excel format or another electronic worksheet format of a beginning balance plus the incoming minus the outgoing equals the ending balance. The other thing that's a common mistake is what I call the all's well syndrome. That when you get your bank reconciliation from the provider, whether it be an outside vendor doing the reconciliation for you, or whether it's because the bank or the service provider, your software provider does it, and you see the reconciliation and shows the company side, the control side equals the bank side, so it's in balance. They think, well, all's well, and there's nothing that has to be done. What they don't focus on is that there are exception items or possible exception items on that reconciliation arriving at this uh, adjusted control balance that equals the adjusted bank balance. And so they just put the reconciliation in the drawer and don't worry about it. Well, no, if you see exception items, you need to address them. And all three of the regulators, the Department of Financial Protection and Innovation, the DFPI, the Department of Real Estate, the DRE, and the Department of Insurance, DOI, require that all exception items get cleared on a timely basis, and they would prefer it be done by the 15th of the following month. So that's something that's very important to do. Now, with the other thing is if there's a bank exception item, it's your responsibility to notify the bank that either a check paid for the wrong amount or something was out of sequence, that so that they can make the adjustments on their side. Another common bank error we're starting to see is service charges, where the bank is assessing a service charge against the trust account for an outgoing wire fee, for a returned item fee. Banks are not allowed to charge the trust account service fees. That's in the financial code. And so what they have to work that out with you, whether you have to reimburse the bank or whether it comes out of your operating account. But banks are not allowed to charge trust accounts. So if there's ever an exception item on the reconciliation for that, you have to notify the bank. You notify the bank fix that. Now, one thing else with the trust accounting practices is getting into a review process where you want to make sure that your escrow trial balance is the same as your escrow control balance, which is also the same as when you add up all the ledger cards, so that you have what they call as a three-way reconciliation, so that you've got an escrow trial balance which lists all the escrows and the balances in those escrows. You've got this daily control summary that you're doing on a daily banking process, and then you have a they call the status report or the ledger report, where it shows all the activity in all the escrows, and all three reports have to come up with the same amount to know that you're in balance. So that's the best practices about escrow trust accounting. Any questions, certainly welcome to contact Haas and Dawe or contact your software provider or get in touch with your banking representative. We'll see you next time.